Okay, so let's have a look at the 7th adjustment for Melba Limited 2015 company code question. And this is looking at our bank statement. This is telling you the figure for a bank and the trial balance has been taken from the firm's bank account. However, bank statement dates the 31st of 12th 2014 has arrived showing an overdraft of 46,690. A comparison of the bank account and the bank statement has revealed the following discrepancies. So 2 months investment income have been paid directly into the bank. So first of all, we need to find out how much that 2 months investment income was, adjust our investment income due by that 2 months, and then adjust the bank overdraft by that 2 months as well. And then a payment from a liquidator was received directly into the bank. This represented a first and final payment of 25 cents in the euro in respect of a debt of 4,000. So there's 3 things we need to do anytime we get a payment from a debtor or from a liquidator. 1, we need to adjust our debtors. So our debtors are going to be adjusted by 4,000. We're going to decrease our debtors by 4,000 because we're not going to be able to get that money from them because it's the final payment. Then we're going to create a bad debt recovered with the amount of money we did receive. So we received for every 25 cents in the euro. So we received a quarter of the 4,000. We only received 1,000. So that means 1,000 is extra money that we didn't think we'd get, but now we are getting. So that's going to be a bad debt recovered. And then you need to adjust your bank by that 1,000 as well. So a couple of steps to this. So the first part then, as part of our bank, just for this particular one, part 1, is got to do with investment income. Just need to recalculate the investment income due with the 2 months that has been paid because we have received it. And then we need to adjust the bank account by the same amount as well. So we're going to go up to our investment income due. I have an adjustment done for that already. So here is our investment income due. For the year, we're going to receive 10,500. So it's going to be 10,500, divide that by 12, and that's going to tell you how much you're going to receive per month. So it's 875, and then we're going to multiply that then by 2 months, and that'll tell you how much investment income we receive for 2 months. So we received an extra 1,750. So we've already calculated what our investment income due should be, so we just need to adjust that. So the amount that we have is going to be 7,000. That's what we have it calculated to be. From the bank then, we received an extra 1,750. So we need to reduce that 7,000 by 1,750 because we did receive an extra 2 months. But we just didn't put it into our bank account for whatever reason it was, or we didn't adjust our income account for whatever reason it was. So that is our new figure now, 5,250. That's going to be our investment income figure. That goes in the balance sheet as a current asset. Okay, so it tells in the question that it was 2 months investment income had been paid directly into the bank. So what we do, we found out what that 2 months was. So 10,500 is how much we're going to receive. If you divide that by 12, it'll tell you how much we're going to receive per month. So 875 is how much we receive per month. You multiply that by 2 months, and that will tell you how much we have received. So we've calculated 7,000 to be our investment income due. We did receive an extra 1,750, so we need to reduce that 7,000 by the 1,750, and that's going to be our new investment income that goes into your balance sheet as a current asset. We also need to adjust the bank account by that 1,750. So we're going to have adjustment here, amount. We're going to find out, is our bank on the debit side or the credit side to find out is it an asset or an overdraft. So our bank, it's on the credit side, so it's a liability of 550,000, so that's an overdraft. We received an extra income of 1,750, so that's going to reduce our bank overdraft. So our bank now is 48,250. Okay, so part 2 then of that was a payment from a liquidator which received into the bank. This represents the first and final payment of 25 cents in the euro in respect of the debt for 4,000. So the debt was 4,000, so that debt needs to go down. So the first thing we're going to do is we're going to reduce our debt. We're going to create a bad debt recovered, and then we need to reduce our debtors. So we need three parts to this. So our debtors, we need to decrease our debtors with the full debt, which is the 4,000. We need to create a bad debt recovered, which is extra money that we didn't think we received that goes into your add operating income. And then we need to decrease the bank overdraft with the money that we received. So we're going to go to our debtors. We have an adjustment done for debtors already. So we're going to go back to that debtors, which is working 9. So the amount that we have is 98,800. Our bank then 4,000, or a bad debt. We need to reduce our debtors by the 4,000. So our new debt figure then is 94,800. So we're not going to use this one anymore because that's the old figure. And this 94,800 goes into the balance sheet as a current asset. Then we need to find out how much did we actually receive. So our bad debt recovered. So this 4,000 is worth, so what way is it phrased? It's phrased, this represents the first and final payment of 25% in the euro. So 100% is the 4,000. So 100% is equal to 4,000. So 1% is equal to 4,000 divided by 100. So 25% then is equal to 40 multiplied by 25. So our bad debt is going to be 1,000. So that's how much we received. So that's going to go into your profit and loss, add operating income, because that's an extra 1,000 that we didn't think we would receive, and it's also going to decrease our bank as well. So our bank is 48,250. The bad debt that we received is 1,000. So we need to reduce our bank, because remember, our bank is a bank overdraft. It's an extra 1,000 that we got. So that means our bank is going to be 47,250, and that's going to be into the balance sheet as a current liability or creditors due within 1 year. So the last part then we have to do is we need the debt then, so the bad debt that we haven't recovered. And that's going to be record the difference between the debt received and the total debt. That's going to be the expense then that we have to the business itself. So we have a bad debt. So the total debt that we had in the question was 4,000. We received 1,000. So the debt to the business then is 3,000, and that's going to be your expense in the profit and loss. Your selling and distribution. So just that, there's four parts. You're going to have your debtors that we need to decrease with the full debt. You're going to create a bad debt recovered, which is the amount of money that we didn't think we were going to receive. That goes to your add operating income. You're going to decrease the bank then with the amount of money that we received, because that's going to reduce our overdraft. And then you're going to have a bad debt to the business itself, the expense to the business, which is your 3,000. So a couple of parts to that bank. So each one will be different, and it's just how you're going to treat that and how it affects the bank statement and how it affects the individual accounts then as well. And remember that the steps for this one here usually are the same all the time. So you're going to record your bad debt, you're going to record your bad debt recovered, and you're going to fix your debtors. A check issued, number 3, a check issued to an advertising firm for 560 has not been presented for payment. Just be careful with that. that if it hasn't been presented for payment, well then no money has exchanged. So a check is written, check is usually written on your bank account, that's where money comes from. If you write a check and give it to somebody and they haven't brought to the bank, then money hasn't left your account. So they haven't presented for payment yet, so the money hasn't left the account, so it's not going to affect your bank, so you don't do anything with that. So it's just 1 and 2 need to be adjusted, 3 then it's just a red herring, you just leave it blank. And that's how you do adjustment 7 for Malba Limited.